Hello viewers, in this video I'll be going over gold miners ETF ticker symbol GDXJ. Today we are up 70 basis points and we have about 2 hours left in trading. On the 1 hour chart we do see a possibility, the 1 hour MACD turning positive, and as we make higher highs and we see the convergence on the 9 and 18 moving averages. And as for the 4 hour chart, we do see we see a convergence in progress in the 4 hour MACD, and earlier this week on Tuesday we were oversold on the RSI, and as we continue to move on higher we may see this is the immediate support that we are finding, and as we can see, we see the 9-day moving average diverge onto the 18-day moving average, this purple line. So that is some concern for the bulls. Then again, it happened back in August 21st. We see a divergence and we quickly made new higher highs. So there's a possibility we may continue to make higher highs, but there is a concern that we close below the 50-day moving average for 3 days already, unless today we are able to close above this moving average, or this yellow 50-day moving average. So right now immediately we see a possible resistance at the, let's see if I can, all right. So the resistance that I see is the 9-day moving average. That coincides with the 18-day moving average as well, and that is at the price of $40 or $40.20. And that also was past resistance back in July or late July. So for support, if we do proceed down lower and head down lower, our next support is this price range, which acted as resistance back in June. So at the price of 35.70 cents. So there could be a possibility we may head lower as we see the MACD starting to point negative. So if we do head lower, that price movement is roughly around 6.3%. But if we do reverse and head on higher, that price movement is around 4.8%, actually 5%. So let's head to the forecast model. On here, I'll go day by day, where gold miners will head to the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, 7 days out. So which one of these forecast models we should focus on? Ideally, the forecast model that is the best match to the current trend. We have the current trend right here. And the trend in question that I believe is the best match is the 2010 July 30th to 2010 October 25th. Let me point out why this trend is the best match to the current trend. So what we have here in the beginning of the trend, we touched the upper Bollinger Band right at this instance, and then we made another touch on the upper Bollinger Band, another one, and as you can see in this trend we remain above the middle Bollinger Band for majority of the time, but we proceeded to break down. So we have these instances where it touched the upper Bollinger Band, and currently we are at the bottom Bollinger Band right towards the end. So we start to see this pattern shaping here as well. So we have here a touch in the upper Bollinger Band, and once more here, and then you start to see similar pattern shaping. So one right here as well, and 2 more right towards the end, one right here, and finally right there. And then we proceeded to break down below the middle Bollinger Band right here, just like what we see in the current trend. And let's make this red. So we have those points. So we have about 1, 2, 3, 4, 5, 6 points. We also have 1, 2, 3, 4, 5, 6 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the trend that we just examined was July 30th, 2010 to October 25th, 2010. And it looks like back then, gold miners was up around 5.6% or 5.5%. So we may see a reversal and may even touch the 9 and 18-day moving averages as resistance, which we indicated in the technical analysis. And if you want this software, you can sign up in the link below, and it's available once it releases. So that is all. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.